Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Thanks for having me.
All right. So, this is one of those retailers I think a lot of people want to hear about, Landon, just due to the fact that it seems like they're not doing anything right. They got a big dividend, 4.3% dividend yield. Who knows if that sticks around? It's never guaranteed. But it just seems like the missteps from the leadership of this company, when consumer spending is still robust, their competitors are doing well, it's just not adding up, Landon.
Yeah, I tell you, it's been a bit of a tough year. I mean, a year ago, the stock was at like 167, I think. But it hit a low in April of 87. It's been kind of slow and steady grinding up to about 105 right now. So since April, I think investors are probably kind of calm, still disappointed from what could have been, but at least it's, kind of hanging in there. But you're right. They've had a lot of missteps. And I think a lot of it comes from just like, sticking their neck out and getting into divisive issues when really you just need to sell good products at a good price and have good service. Like, keep it simple, right? Stay out of that kind of stuff. And I think that, a lot of investors are looking forward to a CEO change. There's been talk that he's ready to step down at the end of this year. And, I think that this call could actually, indicate whether or not someone's being promoted or they're bringing someone from the outside. So I think there's a lot of sort of hope on the investor side that maybe they can get back to business. And really, actually, we're seeing that. We're seeing a little bit of a back to business mentality. Their digital numbers are very strong. Their same day delivery numbers are up 36% year over year. In fact, 70% of their online purchases are delivered in one day, which is really strong. I mean, you think about what Amazon's doing, that's actually really good numbers. They've remodeled a lot of stores. Those are adding to about 2 to 4% on their comp lifts. As far as tariffs go, they're moving away from that. Their China sourcing was about 60% back in 2017, and today it's at 30%. Next year they expect it to be down to 25%. So they're diversifying, sort of like we talked about with Home Depot. They're moving away from tariff vulnerability. They had a great promotion with Kate Spade. I know that we look at the consumer numbers for happiness and sentiment around the back-to-school shopping. It was very strong. People liked the selection. They liked the pricing. So they're starting to kind of move in the right direction and focus on the things that got them there, which is seasonal promotions, family-friendly events, value-driven messaging, and stay away from the divisive stuff. And I think we're starting to see a light at the end of the tunnel. And what's great about this report here is I don't know if expectations could be too much lower. I mean, they're really low. The stock is basically cut in half from its highs, even though it's been grinding up a little bit higher since then. It's down significantly from its highs. And you can see when we look at the web data, it's really strong. Plus 21% beating Walmart. Now, again, this is year over year. So when you have a really low or bad year a year ago, it's easy to beat these numbers. That's why you're going to get a big number out of Target. So this is more about how poorly they did last year than how great they're doing now. So they're not doing great, but they're doing okay. And okay compared to really bad is great news for investors. So I think that there's actually an opportunity here to see a beat to the upside on really low expectations and doing things, again, back to business, keep it standard. For many years, Target was had way better scores than Walmart in just about every metric that we tracked. And then, a few years ago, they got into the divisive stuff. They went off the rails and you split the country in two, and some people hate you, some people love you, and you just can't do that. You just gotta let people assume that you agree with them and you're just going to sell them great products at a great price. Like, that's it. Stay out of it. So once that happened, they stopped chasing Walmart with our data. They went the other way. But now we're starting to see them come back and get back into the normal business thing, normal business operations. And because the bar, again, is just so low, I think they have a chance to beat here, especially if they make a good announcement on a CEO. I think investors could really like that.
Landon, I think you're onto something here. Think about this. Their forward PE right now is slightly below 15. Walmart's 37, Costco 52. So in terms of big box retail, some of that's justified. The valuation could not be cheaper. The analysts' views could not be more negative. The most bullish views are caution. That's the most bullish. It couldn't be a more negative scenario. And Tom, Landing, you guys know when everything is negative and the bar is so incredibly low, any bit of daylight can send a stock higher. And that's what this company has to hope for, because the valuations, valuation's cheap. News, all negative. Barely scratching to the cautious level. Landon, what is it that can be positive? Is it a new CEO? That would probably be portrayed as positive if they were to replace the CEO. But Landon, this stock is trying to find its role in big box retail right now, doesn't have one.
Yeah, I agree. I think probably the CEO is the most anticipated or most hoped for change from the investor group. But I think that if they just put out strong numbers, I mean, if you look at this chart, the web visits on a year-over-year basis, and this goes back a couple of years because there's so much seasonality around Christmas, which you can see here. But it's higher highs and it's higher lows. It's a turnaround. This is data that is moving in the right direction. If we had a longer chart, you'd see a big decline right ahead of this, and now we're starting to flatten out and even move up, which is why we got that plus 21%. By the way, the app data plus 23%. So both app and web are being used more. More people are starting to go there. And again, it is up and to the right to a degree, but it's more of a function of about how poorly they were doing. And you know, when you've got a company that's just bleeding and just doing terrible, when the bleeding stops and all of a sudden there's a sign of recovery, that is a great time to get in. And if you can get in, you know, I'm not calling this as the absolute bottom for target here, but I think this is the report where investors start to say, hey, you know what? Maybe this company's not dying off. Maybe they just made some mistakes for a few years and they're figuring it out, and this is the turnaround point. The data is starting to point that way. The data is saying this could be a turnaround point. I think if you parlay that with a CEO change, someone with, you know, a great reputation coming in from the outside, a turnaround guy, that, you know, there could be a really big investor report coming up from them. So I'm optimistic. The data, you know, the CEO stuff doesn't factor into our data, of course. We can't quantify that. But when you look at the data itself, it comes out with a score of plus 31. That does account for what the stock has been doing, what expectations likely are. So it takes all of that into account. It doesn't add the CEO stuff. So plus 31 puts us in the firmly bullish camp, not like, you know, shoving our chips all in, but willing to take a bet. And if I'm a long-term investor, then I might add shares ahead of this earnings report.
Yeah, plus 31, that's actually pretty positive from you guys, especially on a retailer like this. It has had some downgrades. I mean, I've seen $93 price targets, but then somebody put it on a tactical outperform list today. So I think foot traffic is going to be key for this, for them moving forward, because I think that's supposed to decrease, according to Placer AI, down another 3% year over year. That's not a positive, but bar is really low, Landon. So thanks, appreciate the data.
All right, thanks, guys. Yep, love to be a contrarian.
All right, love it. That's Landon Swan, co-founder of LikeFolio, breaking down the data. Is this the bottom as far as quarterly reports for the company? Kevin, you know, you look at the stock, they're expecting about just over $9 move in the shares, about 8.5% at this point. So pretty big move priced in. How do you want to look at this one from an example trade?
So Tom, we're going to take that basic fundamental law